Hi, I'm Mary Kopczynski, the CEO of Regulators, live in pretty New York City. Points if you can guess where I am. Here's your update on this week's 19,518 alerts. The regulator of the week is IOSCO. I'm sure that's an obscure regulator that many of you have never heard of, but let me tell you what it is. It is the International Organization of Securities Commissioners, which means it's a regulator of regulators. It's where the regulators congregate and agree to minimum requirements across the globe on certain topics having to do with issuing securities. This means when IOSCO decides something, the SEC and the CFTC are members of IOSCO and will thus incorporate those minimum standards in our regulation. And if the SEC and the CFTC do it, then basically every publicly listed company has to do it. And if every publicly listed company is doing it, that's sort of the industry standard. And some of you may also remember a few weeks ago, I reported that the International Sustainability Standards Board issued new standards for sustainability-related financial disclosures. Well, IOSCO has endorsed these new standards. Pretty soon, we will all be doing it. Since we're on ESG, I will also add that the Japanese Financial Service Agency has put out the Code of Conduct for ESG evaluation and data providers. So if you're one of my colleagues providing ESG metrics, take a look if you want to set up and go global. The topic of the week is the semi-annual regulatory agenda. What is that? Well, it's the time of year when all of the U.S. federal regulators put a notice out about what they'll be focusing on for the rest of the year. This week, 24 federal agencies put out their agendas. The SEC is focusing on finalizing the insane amount of rules they've proposed, and thankfully only has 2 new rules that they're going to be publishing to work on. Another noticeable one is the Department of Defense is ready to put together a cybersecurity maturity model certification program. So get ready to get that certification if you want to have the DoD as a customer. And if you're thinking, oh, I'm not a tech company, it's okay. Well, it's not okay because they're also planning an assessment of contractor implementation of cybersecurity requirements. So get serious about cyber. That's the message. And speaking of cyber, get ready for this. The MOVEit data breach triggered Delaware's Insurance Data Security Act, which allowed Delaware to get data breach reports directly from insurers. Now that it has all the info, it put out a huge notification of all the companies where customers' identities may have been compromised. I suggest you eyeball that list from Delaware because these are big names. The FTC is adopting their revised guides concerning the use of endorsements and testimonials in advertising. And they're also beginning the process of creating a new rule having to do with customer reviews and testimonials. I thought this was actually funny. They got 42 comment letters. 4 said it was too early to pass a rule like this. 1 person said it wasn't valuable, but apparently everyone else who submitted a letter on the topic didn't express a clear view and failed to answer the questions. I love it. Go America. You still have until September 29th. So open the floodgates. Tell the FTC about what happens when there are BS reviews online. Because it's a week, the SEC, of course, proposed some new rules. One rule is about broker-dealers and investment advisors needing to address conflicts of interest associated with their use of predictive data analytics. So basically, if you set up some sort of auto-trading bot that buys and sells, you need to make sure that the bot trades on the customer accounts first and then your own. This was inspired by the whole GameStop fiasco. Secondly, the SEC proposed rules for robo-advisors that would make them register and comply with the SEC as opposed to have the option to apply and be regulated by state securities regulators. I'm meh on it. I mean, I see the value in both options. Option 1 being treat them like other advisors and let them choose if they want federal versus state. But I also see that typically if it's a digital product, people can find it no matter where they are. and it just kind of makes more sense to just have it be federal so they can promote it to all 50 states and move on. Finally, the SEC put out a warning on so-called crypto audits. Basically, this is when a crypto company pays a third party to audit their operations. The reason I would put audit in quotes is because that's like asking a non-lawyer to do a legal review or a non-doctor to give a medical seal of approval. Auditors are formally regulated, and a crypto audit that is anything less than a proper financial audit shouldn't be relied upon by investors. Also this week, there were some moves going on with the bank regulators about liquidity and safety of the market. The European Banking Authority published findings of an ad hoc analysis of unrealized losses on debt securities held at amortized cost in EU banks. Translated, it basically is where the banks are holding something has little or no value right now. If there was an emergency and they had to liquidate today, but that over time that value is realized. So if I loan you $10 and I promise to pay back on Friday, and then I tell you tomorrow that I'm never paying it back to you, you don't truly realize that loss until Friday. I'm not going to go into the results because yes, they're higher than before, but they're hedged. But in short, I will tell you, it comforted me that the regulators are at least looking at the right things. Additionally, Basel III. So again, highly technical stuff. It's all about how much money a bank needs to hide under their mattresses. And kind of like IOSCO, the Bank of International Settlements is the international regulator for banks, and the members are places like the Federal Reserve. They have a Basel Committee on capital standards that sets the amount of money banks need to set aside for safety. Anyway, the U.S. federal bank regulators, the FDIC, the Fed, and the OCC put out a proposal implementing the final components of Basel III. The best part of it, they're calling it the Basel III Endgame, like the Marvel movie. I love it. Anyway, that's it this week for Regulalytics. Join me every Wednesday for your dose of regulatory news.